Wednesday, December 13th, 2023, Monaco 64, home of alternative economics and contrarian views. Recently, I spoke about how the Bank of England is conducting exercises for a geopolitical crisis triggering a bond crisis, a government bond crisis, or a corporate bond crisis. And I think there's some more clues that even in the US they're doing the same thing. And of course, that would be a cover-up for their the powers that be incompetence in managing the currencies of their countries. Well, it's been for the last 50 years, right? We're told we didn't have inflation until recently, but we've had inflation in spades. So that's what we're going to look at today. And we're also going to look at briefly at how the UK economy is not doing that well, and it links up with the debt situation. Before I start, though, I just wanted to talk a little bit about silver. And of course, the best way, I would say, for beginners to start stacking silver is through bullion. And what is bullion? Well, bullion is the easiest way to have exposure in an economical way to silver, as opposed to numismatic or collectors' silver coins. So, for example, the Silver Eagle here, that's a bullion coin, or the Silver Britannia, 1 ounce Britannia. And there's also, I guess, silver bars, that's bullion. That's a very good way to start stacking silver. But and that's how I started back in 2003. I started buying gold in 2002, and then I a year later I went to get some silver. But over the years, I've realized that silver has been money, money of gentlemen, as Norm Franz once said. Gold is the money of kings. And I realized that silver is used everywhere around the world as coinage, as money. And I've taken an interest in those kind of coins. And they can be varied values depending on the scarcity, on the condition. And they're called numismatic silver. Of course, there are some that are almost near to the bullion price because they're not as rare or scarce, and they're not in great condition, but they have the silver. But one example of some of the coins that I really like, and there are others that I like, is this one here, for example. It's from Brazil, from the 19th century. It's 1,000 reais, and it's it's a little bit smaller than the $50. Yeah, pretty much about the same size, I would say. And Brazil, if you don't know, was like an empire until 1889. So Brazil had an emperor. He was related, of course, to the Portuguese royal family. And they split up. Like in 1822, of course, Brazil declared his father declared independence from his family in Portugal and set up Brazil, the Brazilian Empire. And in 1889, the generals and the military in Brazil declared a republic, and they had to leave the country. But these are beautiful coins. And I have also the 2,000 reais and the 500 reais silver coins. And if you want to find out more about the old coins from every nation on the planet, I recommend the website silveragecoins.com. So, for example, these Brazilian coins, it tells me here that the 1,000 reais is 12.75 grams, and they're 22 carat. Of course, the carat is more difficult to know. The weight, you can do that yourself with the scale. So yeah, it's not just Brazil. There, as I said, you can find coins from everywhere around the world. And where can you get these? Well, over the years, you just look around. I think these I bought through Instagram. There's a numismatic dealer. He's Brazilian, based in Germany. And can you trust him? Well, do a small order first. And if you get it, yes, that's fine. You got to try it. Nothing is riskless in life. But I found that this guy that sells these coins is trustworthy. So, or you could look on eBay or your local coin shop. There's many different ways. So before we go into the debt, just want to say as well, if you're looking to stack or you're already stacking, you probably know by now that I have some affiliates. One of them is Miles Franklin in the US. And this week they have some specials. The first special is the 1 ounce silver eagles here. And they're only $4.99 over spot, which I think is a good deal. So check that out. There's details below in the description how to get a hold of Miles Franklin. Let them know that I sent you there, Mario Maneco 64. They also have a 1/10 of an ounce gold maple leaves, and they're only 30 over melt. And they've got the 90% constitutional, or if you want to call it junk silver, US junk silver, dimes and quarters, and they're $3 over spot. So there you go. Let's get back to the debt. So a few weeks ago, I think it was, November 10th. So about a month ago, I spoke about this story here. Bank of England to model major bond market shock. Central banks exercise aimed at understanding how severe stress scenario could affect financial sector. And this is called SWES, which stands for System-Wide Exploratory Scenario. And it says, comes after recent market stresses caused by the pandemic. It also follows last year's mini budget set out by then UK Prime Minister Liz Truss, which led to a surge in gilt yields and sterling to plunge. What I would say about the pandemic is that I think that bond crisis started the year before, in September 2019, with the repo market. And this is what they're trying to cover up here. The problem is that they've printed too much money. The central banks bought too many government bonds. And that's the problem. We have like an enormous supply of debt, not just government, but private and corporate debt. And they're trying to say, it's these outside events that affect these markets. But believe me, it isn't. So what this SWES is focusing on, because they don't want to blame themselves for the coming debt collapse, is this, and I quote, the SWES scenario comprises a sudden sharp shock to global financial markets due to sudden crystallization of geopolitical tensions, the BOE said. Geopolitical tensions. The shock is amplified by the financial sector. Counterparty credit risk becomes elevated and eventually crystallizes. So yeah, this was a month ago, and I noticed yesterday that this came out in the FT. They're doing the same kind of thing in the United States, what they're trying to do. The article says Fed should stress test U.S. banks for China war risk, House panel says. Congressional report calls for a strategy to prepare financial system for conflict with Beijing. So there you go. It's not because they've been spending trillions and trillions in for years and on years, and that they're running huge deficits. No, they're going to blame a debt crisis, a treasury crisis, on a conflict with Beijing, or they're going to use a conflict with Beijing as an excuse to say, look, it was the Russians first in Ukraine, and now it's the Chinese in Taiwan. It's not our fault, even though the national debt is expected to reach like 50 trillion by the beginning of the next decade. So yeah, same kind of, they're on the same wavelength, the UK and the US. And of course, it doesn't really matter for us what the reason is. What matters is that it's going to be bad. And that's why I keep stacking gold and silver outside the system. You have to have as little exposure, in my opinion, to this failing system. But the reason I talk about it is to show you, of course, first that it looks like we're going to get something, some kind of crisis. And second, for you to realize and not fall into their narrative. And why is that? Well, because as Sun Tzu, the Chinese philosopher, once said, if you want to win the war, if you want to be successful, first you need to know yourself, and then you need to know your enemy. And believe me, governments are our enemies. You might think they're doing things for our best interest, but I don't think so. You might think differently, but that's the way I think. And then if you know yourself, you know your enemy, you can do the right things to win the war. But if you don't know yourself, you don't know your enemy, you're going to be in trouble. So, and we're seeing symptoms, of course, that especially here in the UK, that the economy is in big trouble. And why is that bad for the debt situation? Well, just think of yourself. If you're in a lot of debt and interest rates start going up and your costs start going up and your income starts going down, or you lose your job, you're gonna have a tough time. It's the same thing for a country in general. And that's why today we had some really important numbers here. We had GDP for the UK for October, and it was negative. GDP dropped 0.3 month on month. It's expected unchanged, which isn't great. Of course, the mainstream press, they're saying that it was unexpected. Not unexpected for me. If you've been listening to me and what I've been telling you about how government is getting so big and taxing so much, that's going to weigh on the economy. And the other thing we had were some pretty bad industrial production and manufacturing numbers, and also the trade balance. There's a trade deficit of 17 billion. It was expected 14.3 billion. So what does this say? It says that UK interest rates are still very low, and that we're spending more than we're producing. So that should be negative for the pound, negative for everything. And I would say batten down the hatches in terms of the debt situation. What about mortgage rates? Well, I think they're going to continue to go higher in the UK. They've kind of stabilized in the last few months or so, but they're not going to go back down to levels that we saw 2-3 years ago, or even before that. So let's quickly look at the markets then. It's 8:12 a.m. London time. So we've got spot gold at 1979. It's pretty much unchanged. The high's been 83, the low 73. Silver's down 8 cents at 22.68. High's been 83, the low's been 60. Am I discouraged by the price action in the last couple of weeks or so? We saw gold make an all-time high, a new all-time high, and now it's come back below 2,000. Not at all. I think it's just a like a battle for that level, and eventually gold will win out because as you see, the debt is a problem, and the other side of the debt, of course, is the currency, and they've created too much currency, and of course fiat currency, and the anti-fiat currency is gold and silver as well. Silver will eventually catch up, I would say, with gold. Dow futures, well, let's have a quick look here. The Dow futures is up 44 points. The NASDAQ is up 34, and the S&P is up 5 points. To the currencies, sterling is down 0.25%. Not surprising with the data we saw today. We're trading at 125.30. The euro is unchanged at 107.90. The dollar is up 0.25% versus the yen at 145.83, and the dollar is up slightly versus the yuan, just below 720. Of course, we got the FOMC announcement today. It comes out at 2 p.m. Eastern time and 7 p.m. London time. I don't think the markets are expecting anything in terms of action on rates, but the important thing, of course, will be to listen to what they say, or what Powell says in his press conference, and the statement as usual. Aussie dollar, where's the Aussie dollar? Well, that's unchanged at 65.53. The dollar's up slightly versus the Canadian dollar, trading around 136. And the Kiwi dollar is down 0.2%, just below 61. To the commodities, we got WTI crude down 0.8 at 68.23. Brent is down 0.75%, 72.80. Platinum, that's down a couple of bucks, trading around 930. And high-grade copper is down 0.5% at 3.77. And we'll finish off with the 10-year yield. Well, that's down 1 basis point, just below 420. So with that, I'm going to wish you all a very good day. Take care. Bye.